as a retirement advisor, one of the biggest challenges for people today, whether they're in retirement, they're hoping to retire in a few months or a few years, or they're a decade or more away from retirement, one of the biggest challenges is how to deal with inflation, how to beat inflation as they prepare for retirement and as they live in retirement. So let's go for a walk and I'll share with you 5 tips to beat inflation as you plan for or live in retirement. And the first one, one of the biggest expenses that people have in retirement that people tend to underestimate, and that is their taxes. Taxes are typically one of the top, certainly 5 expenses in retirement, and is often one of the top 3 expenses. So being strategic about how you withdraw money from your retirement accounts can have a big impact, and that money can help offset some of this inflation that people are seeing. You don't want to be opportunistic. You don't want to look back after you've taken a withdrawal, let's say from a regular IRA or a regular 401k, and then fill out your taxes and say, oh, I didn't realize this was going to kick me into the next highest tax bracket. So for most of us, planning for how we take money out of our retirement accounts can save thousands of dollars. And for some of us, it could save tens of thousands of dollars. And that's money that we can use to offset the increased cost of other things that are in our life. And basically, when we're looking at inflation and how to beat it, it's either how do we reduce our costs, which is an example of taxes, or how do we get more for the money that we're spending. And another way to reduce costs is looking at your debt. I think now it's more important than ever to look at your debt, particularly debt outside of your mortgage. So consumer debt is more expensive than ever. Car loan debts are more expensive than ever. Credit card debt is more expensive than ever. And so looking at how do you reduce that debt, paying down that money. And part of that is a game of offense and part of it is a game of defense, right? The defense in my nomenclature is paying down your debt, right? If you have credit card debt that's 15, 20, 25, 30%, boy, paying that off, there's not many ways to get a guaranteed 15% return or higher, but if that's what you're paying to your credit card company, every $1,000 you pay off is the equivalent of getting that type of return versus carrying a balance. So paying off what I call destructive debt, which is not something that's building a long-term asset for you. For most of us, the only constructive debt that we have is our mortgage, right? We're building a long-term asset that hopefully is holding its value and hopefully is actually increasing in value. So strategy number 2 for beating inflation, whether it's in a retirement plan or in retirement, is paying off your debt, particularly the high-cost destructive debt that is not helping you build a long-term asset. And probably the most important long-term asset that any of us have is our physical bodies, right? This is the vehicle that we get to take into retirement with us. And so beating inflation, getting more for your money, getting more enjoyment for the time that you have and the money that you have, that really comes down to health. And health, in my opinion, is much more important than wealth. There are ways that we can make up additional money. There are ways that we can save money. There's ways that we can earn additional money. But at our age, once our health is lost, it's really hard to get it back. So do what you can, invest the time, invest the money to stay healthy. Whether that means going to the gym on a regular basis or having a home gym, eating in as healthy of a manner as you can, cooking more meals, choosing a healthier option at a restaurant. Few of us think about retirement and are dreaming of the day that we can have aches and pains and have a serious illness. So do what you can. It's not all in our control, but some of it is in our control. And so do what you can to stay as healthy as you can. Okay, number 4, Sometimes less is more. And what do I mean by this? You know, many of us may have a house that we had when our kids were young, and we had young kids at home, we were raising a young family, and now, you know, for many of us, the kids are gone. The kids are either off at college, or they're out living their own life, and our space needs are not as high as they were before. So it might be worthwhile looking at downsizing your living situation. You know, if you're in a 5,000 square foot home, you know, could you live comfortably in a 2,500 square foot home? If you're in a house that's in a really nice school district, and you bought the house there because you wanted your kids to go there, could you move the next neighborhood down and save some money and be able to put that money towards your retirement savings, things like that? And speaking of lower cost housing, you know, the housing in the United States, the cost of living in the United States is quite high. Could you, for a couple years, enjoy living in a foreign country? There are many countries that are less expensive than the United States. So, you know, these are things that we can do to beat inflation. Now, it wasn't that long ago that inflation was roaring towards almost 10%. And fortunately, we've come down off of those highs. We're now, as I record this, in the high 3%, the low 4% range. That's the good news. The bad news is that what I call the last mile of inflation, going from high 3s to 2.5% to 2%, it tends to be the hardest. And I think a lot of people got ahead of ourselves, thinking through how quickly inflation would be tamed and interest rates would start coming down. Yes, it was driven in part by the pandemic, the inflation, right? We had supply chain disruptions. We had increased demand because there was extra stimulus in the economy. And so a lot of folks thought it was going to be transitory. However, history shows us that it takes time to get that inflation back down. And remember, even at 2% inflation, that does not mean that prices are coming down. 2% inflation means if something costs $1 this year, a year from now, it's probably going to cost us $1.02. So, you know, my favorite box of cereal, unfortunately, during the pandemic, doubled in price. You know, it went from $2.50 a box to a little over $5 a box. And you know what? I'll tell you what it is. It's Raisin Bran. That box of Raisin Bran is never coming back down, likely in cost. In fact, in my case, like many of you, I just switched suppliers. I went to the store brand, which is something that we can do. Again, it's getting more for the dollars that we are spending, or thinking through how to spend less. So hopefully you found this helpful. If you did, another way to beat inflation is to have additional earnings. And that's why I made this video here, 5 good paying remote jobs for retirees. Thanks for watching this one, and I'll see you in the next video. Bye-bye.